Joining us right now is Ivy Zelman, Zelman and Associates Executive Vice President and co-founder. And Ivy, what do you think's happening here?
Well, we had a 40 basis point decline in mortgage rates. And good morning, by the way. Thanks for having me.
Good morning.
The preliminary results that we have is about a 60% sample size from our home building survey that represents about 15% of new home sales. And we saw a big bounce in August, and I think that's a response to the drop in rates. Now, keep in mind that builders are offering pretty substantial mortgage rate buy downs. In fact, some of the product is being offered for 30 years in the high threes. So you can imagine that's quite a value for the consumer and offsets some of the stretched affordability that we've been, seeing in the market. So very positive.
How much of this is because of lower rates and the expectation that those rates will continue to come down?
Definitely a benefit from the lower rates, but it's interesting because in the existing home market, there's really been no benefit at all to the drop in rates so far, and yet we've seen rising inventories, so people are contemplating moving, and therefore they're listing their homes. However, the lack of certainty of when the Fed is going to cut, I think, gives many of those existing buyers reason to pause and wait for the further decline in rates. They don't have the mortgage rate buy downs and other value propositions that the builders provide in the existing home market.
We've had this huge gap between the supply and demand of homes required in this country for a long time. Where do you see that gap at this point, and where do you think it's going to be, let's say, over the next year or so?
Well, there's a lot of talk around this shortage. The problem is that we have a very significant shortage, but I don't think we solve the problem because the product we're providing doesn't offer the monthly payments that people can afford. So, yes, we have a shortage. Now, if we offered product, whether a rental apartment or for sale product that allowed people to buy, let's say, for $1,000 a month, that would allow for a lot of decoupling, a lot of roommates going on their own or people leaving mom and dad's. But we don't have the ability to build that product. So I think it's more rhetoric than anything that we should focus on, frankly.
Don't have the ability to build that product because it's an impossibility. Yeah, there's not enough land, the costs that come into this. So how do you get that? And I'm asking this in the context of a presidential election where both candidates are saying that they want to address affordable housing. What's the best way to get at that, from your opinion?
Frankly, I don't want to be too cynical, but I don't think they can. It's at the local municipality level. Builders are charged what's called impact fees that can represent anywhere from 10 to 15% of the home price. Basically, it's the cost that developers are absorbing, local school fees, the police department, fire department, all of those costs on top of the actual land. And land has been inflating with no abatement for the last 15 years. So I don't think you can, frankly, at the federal level. And I think that both of the candidates really are focusing on demand. And that's not, as you pointed out, the problem. It's supply.
If the problem is local and state level fixes, there's got to be some places where it's more attractive to builders. Where would those places be, and what do they do differently?
I think that you have to go to markets where the impact fees first are low, and you have, just overall probably arguably markets that are not as hot, where people have not wanted to move. The Midwest is always a market that's more affordable. But today, I think builders are recognizing that, but they're continuing, really more importantly, to sprawl in existing markets. So when you look at where they're building new communities, they keep going further and further out. And that is really the only way to offset the higher cost lands is the further you go out, the lower the land prices. So that's how they've been basically offsetting those higher costs.